All right, hello everybody. Thanks for joining us so far. We're going to get started in about 15 minutes. While you wait, you can connect your audio. You can listen through the computer speakers or you can dial in using that teleconference number in the audio pod. You can also check out the handouts in the handouts pod. You can there's one set of handouts there with slides, and also in the handouts pod there is a sign-in sheet, and that sign-in sheet's for group participants only. You'll use that to earn your CPE only if you're in a group. And you can go ahead and review those slides now and maybe come up with questions in advance for our instructors. And thanks for joining. We'll get started in just a couple minutes.
Thank you, Chrissy. Good morning, everyone. To those of you who have joined some of our previous webinars, welcome back. And for anyone who's just joining one of Terry Bekaert's nonprofit webinars, welcome. And we hope that you all find some value and can get some use out of listening to the webinar for the next 50 minutes or so. Just to give you an idea of who you are listening to. So my name is Bryn McNeil. I am a partner and I sit in our Washington practice. And I've been with the firm a little over 15 years now, and I am in our assurance services. And with me today I have Lucy, and I'll let you introduce yourself, Lucy.
Yes, hi, I'm Lucy Vasquez. I'm a manager and I sit in the Atlanta office. I've been with the firm for about 4 years, and I'm also in our assurance practice as well.
Great. Well, thank you, Lucy. And just to go through the learning objectives of what we're going to be covering today. So hopefully this is what you're going to be getting out of the webinar. So a list of the key financial ratios that are important to nonprofit stakeholders. And also we'll be describing what should be included in an operating measure. So we'll kick it off this morning with our first polling question. And what is the mission of your organization? And Chrissy, if you'll go ahead and open that poll for us. We've got a few answers in here: educational institution, church or other religious organization, cultural or artistic organization, social services, or other. Just a reminder, you do actually need to click submit on here so that you can get your CPE credit. All right, Chrissy, if you want to go ahead and close that poll, we will continue on. So what current nonprofit industry-specific guidance is there really entailing around the use of operating measures for nonprofit? And so I think, Lucy, if you want to kick us off, we can start with really, what's the primary purpose of a statement of activities?
Yes. So good morning, everybody. So I'm going to go into a little background before we kind of get into that, and then we're going to go over where we currently stand with NFP industry-specific guidance. But starting first with the statement of activities, the purpose of the statement of activities is to provide relevant information to the users regarding effects of transactions and the change in amount of nature of the net assets. Also provide information about the relationships of those transactions to each other and how the NFP's resources are used in providing various programs and other services. So what happened during the year? Was there a fundraising campaign? Was there capital projects completed? Certain program activity that changed? Really is telling the users kind of what happened with your organization during the year.
Great. So now that we understand kind of what the purpose of the statement of activities, what's the real benefit of the information that's provided within the statement of activities?
So it's beneficial in a few ways to the users. The statement of activities, along with the related disclosures, help donors and creditors and other users of the financial statements to evaluate the performance of the nonprofit during a period. assess that NFP's service efforts and its ability to continue to provide those services. And it also assesses the stewardship of those assets. Is NFP's management doing a good job and being good stewards of those NFP's assets?
Great. So it sounds like it's really just trying to provide some transparency there. If you don't mind just giving everyone on the webinar today an understanding of what the current reporting standards are as it relates to GAAP and what requirements are versus what's just permitted or recommended, so that we can kind of have a basis from where we are as it stands today.
Yeah, so current reporting standards permit but do not require NFPs to present an operating measure on the statement of activities. So the current standards note that classifying revenue and expenses within the classes of net assets, which used to be unrestricted, temp restricted, or perm restricted, and now with the new ASU, that's now called with donor without donor restrictions. But that doesn't preclude them from incorporating additional classifications within the statement of activities. So it's like two layers. You have your restrictions, and then you can also have a view of, for example, operating and non-operating, expendable and non-expendable funds, earned and unearned income, and recurring and non-recurring transactions. So those are all considerations in looking at how to present measures of operations. But again, that is not currently required. NFP financial statements can look very different across the board. Some may currently have all revenues together, all expenses together, and really not any consideration to what is operating versus non-operating, while others may already be presenting and considering in consideration of what items are part of the core operations versus those that are not. So there's just a lot of differentiation in the industry. The standards do note that if an NFP uses the term operations, use of the term operations is not apparent from the details on the face of the financial statements, a note to the financial statements is required to describe the nature of the reported measure of operations and the items that are excluded from operations. But the NFPs are currently not required to present any other disclosure about the reported intermediate measure of operations.
Great. And are there any limitations on the use of the measure of operations that would be imposed by any of these topics?
Yes, there are some limitations on what can be included and excluded from that term income from operations. So some of the items that are required to be included are impairment loss recognized for long-lived assets, any costs associated with exit or disposal activities that are not involved in discontinued operations, and any gain or loss recognized on the sale of a long-lived asset. And then the one item noted that is required to be excluded from income from operations is any components of net periodic pension costs and net periodic post-retirement benefit costs other than that service cost component.
Great. Well, that was definitely a great summary of what the current GAAP requirements are, what some of the benefits of our statement of activities, and also some of the limitations about the use of the measure of operations. So let's roll into our next polling question. So do you currently present an operating measure? Yes, no, I'm not really sure, or I actually do not have to prepare a financial statement. So Chrissy, if you want to kick off that poll, we'll give everyone a couple of seconds here to respond to that and make sure you are hitting submit. Okay, Chrissy, if you want to close that poll, we will continue on and we will start talking through the exposure draft and what's to be anticipated and expected with the current exposure draft that's out there.
Yes. So I'm going to step back a little bit and just talk a little bit about what Part 1 was. Part 1 was actually the ASU 2014-16 related to the presentation of financial statements of non-for-profits. The initial exposure draft included two components, and it was actually broken up into two parts. So part one was that issued ASU, which was issued back in August 2016, and that had an effective date for fiscal years beginning after December 15th of 2017. There was early implementation was permitted, and retrospective application is required for those presenting comparative financial statements. So some clients may be going through that process now if they chose to early adopt. But that was part one. So getting into part two of the exposure draft, the part two covered two major areas: operating measures, which is kind of what we're focusing on today, and also statement of cash flow realignment. So really, once I think there's some decisions or there's some more further comments coming out of the operating measures side, the statement of cash flow realignment is really just to realign the cash flow statement with any changes that are made to operating measures and the presentation of the financial statements or the statement of activities.
Great. So we've spent a lot of time, I know, in prior webinars and really a lot of time with our clients or prospects going through the ASU 2014-16 piece of it, which is what Lucy was talking about as part one. So it's great that we're now also focusing on and spending some time ensuring that everyone understands part two of this exposure draft, and really, as she said, it's focusing on the operating measures and the statement of cash flow. So going in, do you mind giving us a little more detail about two regarding the operating measure?
Yes, so the current status right now of this is the NFP Advisory Committee had a meeting actually last month, and the FASB has combined this part two project of the operating measures with the for-profit issue of structure of the performance statement. So this part is all currently in the research phase. The last update has come from the FASB was November 14th of last year. But the objective of this new combined project, and it's titled Financial Performance Reporting, is to consider whether to require a measure of operations and whether and how to define that measure of operations for both nonprofit entities and also for business entities. So they're kind of looking at all of that in one project because it's just aligned, and they're going to keep working on that, and we'll see what they come up with.
Great. So maybe it will be helpful if we go through and actually show some examples of what this proposed exposure draft would look like. So maybe we can talk a little bit more in depth about what the proposed changes mean, and then we could also go through some example statements so that folks can have an idea of what this would start looking like.
Yeah, so now we'll go in a little bit more into the particulars of the operating measure piece of that exposure draft. So really it covered two areas, the intermediate measure of operations piece and then also transfers. We're going to go into transfers a little bit more further on in the presentation, but we're going to start with just the immediate measure of operations and kind of what that's going to look like. So basically two ways or two filters we're looking at this through is how to define those measures. One, maybe through mission, the purpose for existence of the organization. Another one is through availability, what resources are available for current period activities.
Great. So in looking at a sample financial statement, maybe just walk us through and take us through what a one-column format would look like and what that specifically entails.
Yes. So we're going to walk through this one-column format. So basically the one-column format has all the activity under two major categories. So first you would see your change in net assets without donor restriction, and they would have all your revenues, your net assets released, and your expenses. And then further on down, it would have your change in net assets with donor restrictions, and then just have that same information under that section. So the first one that we're looking at just has your, like I said, their change in net assets without donor restrictions. And then it lists their specific revenues and gains at the top. I just wanted to note there's two items there. We had just talked about the requirement of the gain on sale of assets. That's included here. And also it looks like the client considers the investment return as part of their operations as well, as that's included up above. And then you get down below to net assets. In this example, they're actually showing quite a bit more detail, I think, than we've seen in the past. I think this is part of some of the proposed changes they're looking at, is putting more information into those net assets released from restrictions. So this is just one example. I think a lot of the times now we just see that in the back in the disclosures. And then you get there to the bottom, which just has your total revenue gains and other support without donor restrictions. That's one example of an intermediate operating measure. And then if we go to the next page, there's just the expenses and losses, and then you get down to your total expenses, and then the next item is the fire loss on building. So that's kind of an example of a non-operating activity. This is very unusual, kind of a one-time, hopefully non-recurring event. So that's shown below the line, as we would say, kind of in the for-profit area. And then you have your total increase in net assets without donor restrictions. So it's kind of taking that same concept here and applying items, that are operating versus non-operating and just differentiating those. And then the next page just continues on to the changes in net assets without donor restrictions, as I mentioned earlier. And just kind of similar example there, has their revenue activity and their net assets released. And then that's all just part of operations. And then you just have your final net asset totals, and that's kind of the end of example 1.
Great. So you can really see that it's differentiating between your kind of 2 new categories of the contributions by donors without restrictions, and then the contributions with donor restrictions, and having those separated out. But hopefully we can all see some specifics as it relates to the operating measures through that. So there is another way that you can show these, and that's through the multi-column format. So we thought it might be helpful to walk through an example over that one as well. So Lucy, I will turn it back over to you, and maybe you can just go through what it looks like relative to having a multi-column format.
Yes. So the multi-column format would simply have all your revenue, expense activity all down to the left, and then instead of having each category kind of listed and then repeating, you would just simply have your with donor restriction, without donor restriction in columns over to the right, and then have your total. So this is just a different view of how you can present your financial statement. It just depends on the organization. Some, may have limited with donor restriction activity. So it may be a 2-column format doesn't make sense. So it really depends on the nature of the nonprofit and kind of what makes sense for them. But this is another option. So yeah, it just simply breaks that out. And that's, again, touching back a little bit to the ASU. So this is a change that a lot of nonprofits will be seeing, that instead of our former 3-column format, it's now down to 2, without donor and with donor restrictions.
Great. And if we carry on to the next slide, I think it's just kind of walking through the same thing, but more or less from the expense side of things.
Correct, yes. And then again, just pointing out down below, there's some non-operating items. We have that fire loss on building, actuarial loss. So that's really some of the items that need to be considered as, the FASB continues to work on this, and organizations need to start thinking about, are you currently looking at your financial statements this way? Is it, a good time to start reviewing that if you haven't yet, to make sure you're kind of ready for these changes when they are implemented in the future. But, it's just another way, and I think really the FASB is trying to provide more clarity and more also comparability between nonprofit financial statements. So someone could just pick up a set of nonprofit financial statements from A or B organization and compare them and be able to kind of get the same information and clearly understand really the operations and the results of that year and what happened with that organization.
Great. So it really seems that it's going to be adding some transparency there, but it's still giving nonprofits the option to determine how they want to present the material. But they have a couple of different options, but it will bring some transparency to the readers of these statements.
Yes,
I think that's perfect. So that's a great summary of when you're just doing the financial statement with the 1 column and with the multi-column. And now maybe we could move into the 2-statement formats and give kind of an overview, an example of what this would entail.
Yeah, so this is kind of another option, and this is new. Initially, the example looks similar to the one column format, but you can see in the title above, it says Statement of Revenue, Expenses, and Other Changes in Net Assets Without Donor Restrictions. So initially, we just have the income statement side of it, and this would all be on one page, really. I think we just broke it out for ease of view and to make sure we could easily see this. But we have all our changes in net assets without donor restrictions, and then our total revenue gains and other support without donor restriction number there at the bottom. And then just continuing on is the expense side of that, and then your total increase in net assets without donor restriction. And then this next page is really what is new. So this is an additional statement that they're proposing. This provides a summary level view of the changes in net assets. So you can see we were just looking at the net assets without donor restrictions. You can see that total there. The total increase in net assets without donor restrictions was $8,030,000. So this is just kind of a new concept, like almost like a statement of members' equity to kind of compare it to a for-profit item. So it just gives the reader a summary level view of the total changes in net assets, because all that information is contained in the front statements, but it's just more of a summarized view. So just another option, something else the FASB is considering. And I think this would really be management's preference and just another way that the organization can present their financial statements.
Great, that makes sense. So the examples that you really walked through earlier were just a statement of activities. It still included the same type of information with the net assets without donor restrictions and then the net assets with donor restrictions, but it just didn't really have everything summarized on one statement necessarily. You still have the separate statements, but it's all essentially the same information. It's just how it's kind of broken out. So again, just for you, for everyone on the call, it would definitely be discussions within management and with the board just to be deciding, what level of, what detail do you want to break out and how much do you want on a single statement versus kind of breaking it out amongst several statements. But the nature of what you're disclosing and the information will all be the same regardless of how you're choosing necessarily to disclose it.
Right, it's just Great. Multiple views and.
Yep, perfect. So I know you mentioned earlier and kind of gave us a tease that you would be talking about transfers. So maybe we could spend a few minutes really talking through what the exposure draft has in the sense of transfers and how that will impact these financial statements.
Yeah, so this is also a pretty new concept as far as having more disclosures around transfers. So the purpose of the proposed guidance is to provide some clarity on internal action and the transfer effects on the organization's operating activities. So in the past, we really just seen, kind of net asset transfer, board restricted net assets kind of broken out as a line item in the face and also in potentially in the endowment disclosure if there's board designated endowments. But this is kind of proposing that you would actually disclose that transfer activity on your statement of activities. So transfers out of operating activities would include when a board designates or appropriates a portion of net assets for use in a future period, which effectively makes those resources unavailable for current operations. The transfers into operating activities would be the opposite side of that when the governing board makes available certain non-operating returns or previously transferred amounts to support fiscal needs in the current operations. So it's just going to be adding some more activity and more clarity on the face of the financial statement or the statement of activity specifically. But we're going to walk through some examples of that. But yes, just a new concept. And again, the FASB, I think, proposing some information that would provide just more clarity and more transparency on the activity on the statement of activities.
That certainly makes sense. I know it might be a little bit of additional consideration for these organizations, but would certainly add clarity and transparency, as you said. We've got another polling question that we can go ahead and pull up. So I know that was a lot to kind of take in, but do you agree with the concepts of displaying transfers on the face of the financial statements? Yes, we understand why that would be something that would add some clarity and transparency. No, or I'm not really sure, or kind of indifferent on this matter of to whether or not this would come through with the exposure draft. We'll give everyone just a little bit of time to answer that, and also just a reminder, because I know everybody wants that CPE, to make sure you hit submit. All right, Chrissy, if you want to go ahead and close that poll, we will continue on, and maybe we can walk through some sample statements of what these transfers would look like and how that would be presented on the statement of activities, so folks can have an idea, a visual idea of what these transfers would look like.
Yes, I think the example is a really great visual and kind of illustrates what they're talking about a little bit more clearly. But the example that we're showing here, so you can see that it's the multi-column format, but it shows your operating revenues, gains, and support, has your contributions, and right underneath of that is kind of where it starts to show an example of what presenting some of the transfers would look like. So for example, we're going to just kind of run through, and there's kind of 3 different line items that I'm going to address on this example. But beginning under contributions, it is backing out contributions designated by the board for capital projects and also contributions and bequests designated by the board for quasi-endowment. So effectively, the board has decided that they have some unrestricted funds and they want to set these aside for these 2 specific purposes. So they're going to reduce the without donor restricted fund number, and we'll get kind of down to that a little bit more by those amounts. And then one thing they're kind of adding here is the next line, the investment returns appropriated from the quasi-endowment. So it's kind of the opposite. They're releasing investment returns that have been earned in this board designated endowment back into use for operations. So you see these. The effect of that is going to affect your total operating revenue gains and other support line down at the bottom. So this is your operating revenue section, and then on the next slide, we're going to go through the opposite, I guess, impact of that. But it's a great example to kind of illustrate what it would look like when you have these board designated activities, either moving money in or designating money out of operations, and showing more, I think, more reflective of what your actual activities were for that specific period. So on the next page, go ahead.
Oh, I was just going to say, so the net effect, though, on the ending change in net assets, there's no impact on that change in net assets since you're reflecting it both on the revenue and expense side of things. It's just showing how that money or how the monies were spent or came in, et cetera. So you're showing both the positive and the negative, so it's really netting out. So it doesn't have an impact, but definitely can add some of that transparency regarding the transfer.
That is correct. So it would not have a net impact on the whole. It's just going to kind of be an in and out. But what the impact it is having is changing what your total operating revenues are. So for example, if you're pulling out $5 million that year, it's going to reduce your operating revenues by that much. Whereas before, that might have only been shown just kind of down in the detail, not necessarily in this specific detail. So the other side of it is down below, and really this is like non-operating. So this kind of combines the topic we were just talking about with the use of operating measures and kind of is layering on this concept of transfers on top of that. So the other side of it is going to be in this non-operating section down underneath of the operating expense section. And that's where you see the opposite ins and outs of those transfers up at the top. And like you said, down at the bottom, your total change in net assets would not be impacted. That's going to be the same. It's just going to show these ins and outs and kind of what the impact on your operations is for that current period.
Great. I think that's a really good point and definitely adds some clarity there. And then, as always, I'm sure whenever there's any type of change or proposed change to the statements, usually there is some sort of disclosure that goes along with it because we always want to add more to our footnotes. So can you talk a little bit more about some potential disclosures that would be coming along with this as well?
Yeah, so part of the proposed changes are, as you said, a disclosure, which I know is everybody's favorite. But the FASB is suggesting, as part of the changes, that it would include an additional disclosure on operating measures. And really, that would be describing to the users more specifically what that specific NFP is doing as far as, what are they considering part of their operations and what are they not. And for example, the example that we're looking at kind of talks about, how they use their investment returns for current operations and, their methodology about that. So it just gives the reader more clarity on really some of their processes and those transfers and overall just their methodology and how they come up with their operating measures. So it's going to just provide more information to the reader. And also this will be part of the process when an entity is considering, what they want to use as operating measures and how they're going to do that. So this really should be an outcome of that overview and those discussions. And so this should be, kind of pretty easy to put together once all of those discussions have been had and the entity decides, what their policies are going to be and how they're going to disclose that.
Perfect. That makes sense. Again, not something that any of us want to have to do, but it certainly makes sense and goes along with all of those new proposed changes. So maybe let's switch gears a lot. I know we've talked a lot about the operating measures that will be impacting some of these organizations' financial statements, but maybe we can switch gears to an adjacent topic and review some key performance indicators that organizations may want to consider in reviewing and analyzing financial statements. So Lucy, maybe you can walk us through some financial statement ratios and help us understand kind of how this impacts an organization's financial statements and also how they're reviewing just the overall stability and how the organization is doing as a whole.
Yes. So I think just all of these changes are coming out of these, the review of the FASB on not-for-profit financial statements kind of leads into the discussion of financial statement ratios. This is an area, that I think is a lot more common for for-profit entities, but nonprofit entities should be looking at these items as well. So I'm going to walk through some different examples. Some of them are a little bit more common in general to all industries, and some of them are more specific to nonprofit industries. So the first one is the current ratio, and that just indicates an organization's ability to meet short-term financial obligations by comparing the current assets to the current liabilities. So the current ratio of at least 1 or greater is preferable, but that's kind of just a general rule of thumb, so that may be different from organization to organization. The quick ratio is another kind of related ratio that looks at this. It's used to gauge financial stability, and it compares quick assets, which is current assets less any inventory and prepaid expenses, and it compares that number, the quick assets, to current liabilities. A quick ratio typically should not be less than 1. The next ratio we have on here is operating reserves. And an operating reserve addresses the questions about whether resources are sufficient and flexible enough to support an organization's mission without having to borrow externally. So it's kind of, a rainy day fund, a fund for those times when maybe you don't have the financial results that you expected for one reason or another. So it compares expandable net assets to total net assets. And a common operating reserve ratio would be no less than 25%. That is a very general rule of thumb. I don't really think there is a, really an industry standard on this, and that will vary greatly from organization to organization. Some organizations may not have an operating reserve, so it just really depends on the nature of the organization, kind of what management's focused on. Maybe that's something you're working towards, but something to be looking at just in your overall operations. The change in net assets just measures financial performance by answering the question, did the organization live within its means during the year? And that really, that can be, I guess, really a reflection of also the activity that you had going on during the year. For example, if in one year you were raising funds for capital campaigns, you might have had a lot of revenue coming in, but not a lot of expenses if that project hadn't started yet. And then the next year you release on all those funds, that's really going to impact your change in net assets a lot. So depending on the activity that's going on from one year to the other, that's not always apples to apples. So you really have to take into consideration what happened during the year when you're looking at the total change in net assets. And then I'm going to go now into a little bit more specific items for nonprofit organizations. So there's 3 different items I want to touch on here. One is program efficiency. It compares program expenses to total expenses, and having this information can help demonstrate to potential funders how efficient the organization is in fulfilling its mission. So there's nonprofits that have multiple programs, but I don't necessarily know how often management is looking at how efficient are we being in running this program and using these resources. So that's one way that can be looked at. Fundraising efficiency is another one. I think this one's pretty common. This indicates the amount of contributions that result from fundraising expenses, and that's by dividing your total contributions by your total fundraising expenses. So the higher that ratio, the more efficient your fundraising efforts are, and that's what everybody wants. You want to raise more dollars with spending less. So that ratio just has different meanings for different nonprofits. You might have different types of fundraising events going on from year to year. So that can just vary, but good thing to be looking at. The next one is operating reliance ratio. This is calculated as unrestricted program revenue or inflows from operations that can be spent at the discretion of the organization. So in other words, non-donor restricted funds, and that is divided by total expenses. Calculating this number will enable management to gauge whether or not the organization can pay all expenses from program revenues alone. A good outcome for this measure is one, but in some cases that might be more than one. Again, this can vary from organization to organization.
Wonderful. That was a very good overview of a lot of ratios. I know there is a question about the operating reserve, and really for the operating reserve, it's looking at what is your expendable net asset, so what is the money that you have available to spend, and it's comparing that to total expenses. So when you look at what monies you have available that you can spend pretty much at any point in time, it's looking at what that is compared to your total expenses. And that's where Lucy was saying 25% is a benchmark that has been thrown out there. It's definitely not anything that's a definitive. Another way to look at it is just looking at, is the expendable net assets that you have enough to cover maybe 3 months of the annual expenses of the organization? So it's just something to look at. Do we have any reserves that we can quickly get to that were available to spend and that are open for us? So that hopefully will add a little bit of clarity. Otherwise, I think that was a really great overview of all of these ratios. And it's certainly something that's really good for management of organizations to be looking at these ratios and analyzing different aspects of the financials just to make sure in doing their due diligence that the organization is financially sound and following what they want to be going and the direction that they want to be going. What are some other considerations that organizations should be thinking of?
So some other items that the organization should be looking at, and I think this is just in conjunction with what we've been talking about today, organizations looking at operating, non-operating items kind of can lead to, well, what is the organization kind of looking at as a whole? Are financial resources being applied efficiently and effectively to support the organization's missions? With nonprofit organizations, really that's the core of it. What is the organization's mission? And everything is kind of driving towards that. But oftentimes, I don't know, if management has kind of ratios in place or kind of a way to look at the efficiency and effectiveness of how that mission is being supported. So that's one item for consideration, just in, review the financial health of the organization and kind of the use of those resources. Another item for consideration is there an appropriate match between the sources of the organization's um, resources and how they are derived for their use? So how are, is that organization being funded? How, where are the major programs that are being run in the organization, and how are resources kind of allocated to all those areas? Do you not have enough people in accounting? Are you kind of a little short there? There's a lot of different areas that can be staffed at different levels, and that's something to look at as well. Um, Also, are present resources sustainable? The long-term health of the organization is something to be looking at as well. Are you kind of looking at the longevity and not just short-term results of the organization? Another item for consideration is what sources of funding are available to support the organization's mission. Are you looking at all kind of venues, and is there any maybe other sources you could be looking at for that? That's also something that a lot of organizations are always looking at, their support and wanting to grow that or to maintain that with their current donors. So just another area to kind of be considering when looking at your overall financial health. Do you need to diversify that a little bit more? Sometimes if you have one major donor, if they kind of pull out the next year, you might be, kind of struggling to make that the operations that you would like for that year. So just some other items for consideration and reviewing the financial health of your organization.
Great. So as Lucy has said, these items are just really great. So as you're evaluating the items that you may include in your operating measure on the statement of activities, these are all just great reminders. And then kind of concluding on it, it's really just to determine how financially sound or healthy your organization really is. That brings us to our last polling question. Hopefully that will pop up here. And do you agree currently or prepare KPIs for your not-for-profit entity? Yes, no, I'm not sure, not applicable as I'm actually not a nonprofit. So make sure to submit your answer so that you can get your CPE. And just as a point of clarity, KPI is the key performance indicators, which were some of the things that we were just talking about, the financial statement ratios, and some of these other considerations with resources or funding, kind of everything that Lucy was just summarizing in this last bit. All right, Chrissy, if you want to wrap up that poll. That actually brings us to the end of the presentation. Lucy, thank you so much for all of that information and insight. I think that added a lot of clarity and was certainly very helpful to hear and understand. So hopefully everyone else felt the same. But with that, I think we are done.
And
I hope everyone.
Brent. We have a few questions in the questions pod. And we do have a few more minutes left on the webinar. And then we do have the polling responses as well. if everyone answered that poll, and we can kind of go over those responses too. But we do have a few minutes to go.
Okay. I can't see the questions very clearly. I don't know, Lucy, if you are able to see those. I saw the one, but
I am able to see those either. Chris, you're able to share those questions with us, and maybe we can just answer them that way.
Okay. So I think you answered the first question about I don't see any ratios in the slides. I'm interested in a ratio to evaluate the level unrestricted net assets excluding expended plant at year end. Do you see that question?
Was that in regards to the operating reserve question that that we addressed earlier, or was that a little bit different?
Are you able to see any of the questions in the questions pod?
I can now see a couple. Yeah, I can see
Okay,
a couple.
I'll read some of these off to you. Why is net periodic pension cost excluded from operating measure, or did I hear incorrectly?
That's just what the current guidance says in regards to the use of operating measures. Currently, that's what it says. I don't believe necessarily everybody's always in compliance with that in the presentation of the financial statements. I have seen it included instead of excluded, but that's just what the current FASB says. I think it's because that also that swing can go, one way or the other a lot from year. It can change a lot from year to year. I don't think you would necessarily want that reflected in your operations because it could artificially either reduce or increase your total results of operations. And I think pulling that down into non-operating really kind of just puts that pulls that activity out and kind of isolates that so it's not kind of impacting your true operation results and that net operating measure is kind of my understanding of it.
Okay, and then the next question is someone's asking for the formulas for the ratios. I don't know if that's something you can provide.
Sure,
I kind of was just reading through them. Go ahead.
Well, I was just going to say, if anyone wants specific ratios, feel free to send an email to either Lucy or myself, and we are happy to provide the actual ratios themselves. I don't think that the specifics of the calculations are detailed out necessarily in the slides, but we definitely have those so that we are happy to provide any of those. They're also available Google would also have those, but we can definitely get those to you. If you just want to send an email, we can get those to you.
Okay. And then the next question says 25% of what for the operating reserve general target?
I think that's the one that I answered. That one I answered as we were going through the slides. That's the only one that I could actually see.
Okay. All right. Next question is current ratio and quick ratio. How did you get to those? Current ratio and quick ratio.
Should I just repeat kind of what they are?
I think that'd be helpful, Lucy.
Yes.
Okay. So current ratio, again, was just comparing current assets to current liabilities, and that will get you, so for example, if your total current assets are greater than your total current liabilities, you would have at least a 1 or greater. If it's the opposite, you're going to have less than 1. So that's kind of how you calculate that. And just to kind of repeat that there, the current ratio of at least a 1 or greater is kind of the standard on your current ratio and how to analyze that. The quick ratio is a little bit related to that, but so it compares quick assets, which is a little bit different. Quick assets are your current assets, but you take out any inventory and any prepaid expenses. So you would compare that total to your current liabilities. So just a different take on the ratio there. And the quick ratio, again, should typically not be less than 1. So just kind of two different takes on how to kind of look at your current assets and current liabilities.
Great. And then the next question is it necessary to footnote internal fund designations on the financial statements?
It is currently not, but that is part of the proposed, actually the ASU that just came out on presentation. I believe that's one of the requirements is more disclosure on any internal designations, kind of what's the purpose of it, or what's it used for. That hasn't been necessarily required in the past, so that is something that the new ASU is addressing and will be requiring for disclosure in the future.
Okay, and just a couple more here. Total expenses include depreciation or cash-based expenses only.
What was the question again?
Total expenses including depreciation or cash-based expenses only.
Oh, no, total expenses would just be all of your operating expenses. So it's not really broken out on, I guess, cash versus accrual basis. It would include everything, including depreciation. I know, that might be different on for-profit. They may include or exclude certain items like interest expense. So I think those are kind of some of the subtleties that the FASB is going to be looking at and trying to standardize what should be included in an operating measure and what should be excluded. But currently, there really wouldn't be any breakout of depreciation expense. From what I've been reading, it's just it would just include that in your total expenses to answer that question.
Okay, and do you have a sheet that will show the calculation of the different ratios on page 34?
30. Oh, I think that's the one we were just referring to earlier. Yeah, we can if they just want to shoot us an email, I can have someone put together the actual calculations and provide those back to anybody that's interested in that.
All right, and then the last question is, each ratio needed to have its own slide showing the equation and hope for results. I'm not sure I understand that question, but
I think that's just a comment. It would have been more helpful to see those instead of me describing them.
Okay. That is all the questions that we have here, and I will get these to you guys, so if you need to follow up with anyone, you can do that. But yeah, if you guys don't have anything else to add, if there's no more questions, then we are all set.
All right. Well, thank you so much, Chrissy. It was, and thank you everybody for attending. If anybody has any questions, feel free to reach out to myself or to Bryn, and we can provide you with any additional information that you would like from today's presentation.
Awesome. All right. Thanks everybody for joining us today. That concludes our webinar, and you all, if you answered all 4 polling questions, you'll earn your CPE. You'll get a certificate in your email in about 2 to 3 weeks. You'll get that certificate. And thanks everybody for joining, and please complete the survey if you have time after this webinar. All right. Have a good day. Bye.
Thank you.